Journaling your trades is one of the most important parts of becoming a successful day trader, and it's also one of the most underrated. It isn't sexy, it isn't exciting, but it is an integral component of achieving success in the markets. And if you want to separate yourself from the 95% of traders who fail, you need to start journaling and tracking your trades, because it is the only method of actually achieving progress and improving your trading. And in this class, we're going to be talking about the importance of journaling your trades and how you could start journaling your trades as soon as this video ends. So let's hop right into the class. Alrighty, so let's get on with it, journaling your trades. And I want to emphasize the PAIR method. And this stands for prepare, execute, analyze, and refine. And by doing this PAIR method, doesn't matter if you're trading, doesn't matter if you're starting a business or doing whatever, you are guaranteed to improve as long as you follow this system, the PAIR method. You prepare, then you execute, you analyze, and then you refine. And journaling your trades is integral for the analyze and refine component of this method. And the first thing that you're going to do is create a trading plan. Now, if you're a beginner and you have no idea how to trade, you don't know any strategies, first you have to get educated. You have to understand what strategies exist, what management structures exist, what type of risk management are you going to be doing. But once you understand all those basic things, and you could begin to create a trading plan. Now, your trading plan, when you first begin, doesn't have to be good. It doesn't have to actually produce you money, but you need to start out creating some sort of plan. And a trading plan is going to consist of the strategies that you're going to trade, the risk and trade management that you're going to do, the style of trading that you're going to do. Are you doing, scalping? Are you a day trader? Are you a swing trader? Are you a core trader? It's also going to give you parameters for reward to risk. It's going to give you qualities that you're looking for each trade that you're seeing. And us as traders, our goal isn't to trade. Our goal is to follow our trading plan. And as long as we could follow our trading plan, then we have accomplished our job as traders. Now, we have to build a trading plan. You could also call it a trading system that can actually make you money consistently. That's our goal. That's what we're trying to do. We're not trying to trade profitably. We're trying to create a system that will produce us consistent trading profits as long as we follow that system. And through journaling, you're going to be able to perfect that trading system. So the first goal is to create a plan, create that system. Doesn't have to be good. It just has to have something. It needs to have some strategy, some management, and that's going to be your starting point. From there, you're going to execute that trading system. You're going to execute that trading plan. And from there, you just take trades, take 50 to 100 trades. This may depend on what type of trader you are. If you only take a couple of trades per day, maybe do 10, 20, 30 trades. But if you're someone like me who takes a ton of different trades, for me, I might be using 100 to 200 different trades. And the point of this is to create a sample size of trades that we could refer back to. So we have our plan. We execute that plan on 50, 100, 200 trades, whatever. And our goal as we are trading is to not deviate from that plan. You can't make any random decisions. Random decisions in the markets leads to random results. Random results leads to you losing money. So make sure you do not deviate from the trading plan. It doesn't matter if it's producing you money or not. It doesn't matter if the plan absolutely sucks. Follow the plan and get into the habit of consistently following your trading system. Now, number 3, analyze the trading plan. So once you have taken that sample size of trades, whether it's 50 trades, 100 trades, 150, your goal is to now analyze all of the trades that you took. And that's where journaling comes into play. You're going to be looking at your journal. You're going to be looking at the strategies that you took, the management that you employed. And you're going to figure out what strategies are making you money. What reward to risk is working for you? Are you making money when you're achieving 2-to-1 reward to risk, or 3-to-1, or 4-to-1? Analyze what trading management style works for you, right? When you're in the trade, what sort of management is producing you the most amount of money. For example, if you hit 2-to-1 profits, are you exiting the entire position? Or are you exiting maybe 50% of your position and you're leaving the other half of your position still on the table, still in the trade, and maybe taking profits on it later? You have to figure out what management is working for you. And then you're also going to be figuring out what doesn't work. So you created your plan, right? Some strategies that you're going to do, some management styles that you're going to do. You're going to execute on that plan, take 50, 100, 150 trades, executing on that trading plan, not deviating from it. And then you're going to analyze all the trades that you took. What's working for you? And the most important part is what isn't working for you. Identify everything that is consistently losing you money in that plan. So let's say out of 100 trades, for example, 60 of them were reversal setups, for example, meaning you were trying to, catch the bottom or catch the top, and you were going for that reversal trade. And out of those 60 reversal trades that you took, 50 of them lost money. Well, there you go. You have the answer. Don't take reversal trades, right? A lot of trading is not about what you're doing. It's not about what you're trading. It's not about adding profitable strategies to your arsenal of techniques or whatever. It's about eliminating what's not working. Take a bunch of trades, track your trades, track the strategies, the management, whatever, and then eliminate everything that is not producing you money. Eliminate everything that is losing you money. And that's where refining your trading plan comes in. You have to eliminate everything that is not working for you. Because guess what? Let's say you have 10 strategies, for example, or you take 10 different types of trades. And you're noticing that there's a strategy, let's say the breakout, that's producing you consistent money, right? Through your tracking, you could see that you're actually making money on the breakout. However, you're not making money on the reversal setups. You're not making money on the scalps. You're not making money on the pullback patterns. From there, you eliminate everything that's not working. And that will make you much more profitable. It's going to make you lose less money because you're not doing the things that, based off your sample size, based off the data that you collected, has historically lost you money. You're not going to be doing that anymore because you're eliminating it. All right? And just continue trading what's making you money based off your data, right? You think hedge funds, high frequency trading firms, they're not collating data for every single trade that they're taking and figuring out exactly what positions are making them money and then eliminating everything that doesn't work? Of course they're doing it. And you should be doing it too if you want to become a profitable trader, okay? And from there, you're going to update that plan. And that kind of goes back to what I said in the beginning. Don't worry about your trading plan sucking. Don't worry about your trading system being bad. It's supposed to be bad at first. But after you take that first 100 trades, you look back, see what's working for you, see what's not working for you, eliminate everything that's not working. You refine the plan. You focus on strategies that are working for you. From there, you refined it, you do it again. You do the pair again. You prepare, you execute, right? You refine your system once, then you take another 100 trades. See what went wrong. See what you could eliminate from your trading. See what's working. And then you refine again. And you continuously do this, where you take 100 trades, you see what's going on, you refine the plan, you take another 100 trades. You see what's going on, you refine the plan, and over time, over iterations of doing this, you will improve. There is zero way you can't improve because you're collecting data based off a sample size of trades that you're taking. And as long as you're following your trading system to a T and you're not deviating from it, over time, you're going to see amazing improvement. You're going to see yourself not having those big losers. You're going to see yourself taking trades that are actually making you money. So always apply the pair method. Prepare, execute, analyze, refine. And you always have to adapt and refine your plan. And I could tell you this, just from my own trading, and it's been 3.5 years now, I've had maybe 3 or 4 times where I've had to completely adapt my trading and tweak my strategies and refine my plan to the point where it's considerably different. It's just how trading is, right? You think about all of the people who made tons of money during the COVID bull run, right? Everyone was just buying the dip. That was their main strategy. And they were printing money. They were making so much money. But then 2022, 2023 hit. The market kind of turned bearish. That same bull run wasn't in effect. The market environment changed. And a lot of those traders who made tons of money gave it all back. They lost all of the money they made, and they probably even lost more than that, right? They ended up being negative. And the reason for that is they probably weren't journaling, they probably weren't refining their plan, and they weren't adapting to the market environment. Always be adaptable. If you have a strategy that's not working for you, don't force it. Why would you do that? If it's not working for you, go back and understand why. Is it the management? Is it my entries? Do I have to focus on a different strategy entirely? Figure out what's not working and change it, refine it. It might be very small tweaks. Regardless, you need to constantly be refining. You constantly need to be sharpening your trading axe. And the only way to be doing that is to be journaling your trades, tracking your trades. And let's talk about how to do that. What should you actually do? So there are two different types of ways that you could track your trades, and we're going to be talking about style number one. So you're going to want to keep a physical notebook with you while you're trading. So go to Walmart, go to Staples, get yourself a notebook, a brand new one, get a pen. And while you are trading, you're going to keep it next to your desk. And when you take any position, you're going to write down the time that you took that position, the time that you took the trade. And it's going to make it really easy for you to go back and look at, the exact time that you were considering to take that trade when you're actually going to be refining and analyzing your prior trades. It's important to know what time you took that trade because you can go back to the charts and see, okay, it was at this time, I was looking at this setup. It's going to make it a lot easier for you. The symbol, right? Are you trading Bitcoin, Microsoft, Apple? Are you trading gold? Whatever you're trading. Time frame, what was the main time frame that you looked at when you were considering that trade? Obviously, I teach about using multiple different time frames, but what was the current time frame you were looking at that made you interested in that position? Write that down. That's going to be useful. Was it a long or a short? What was the strategy? Was it a breakout? Was it a buy setup? Was it a scalp? Was it a climactic trade? Whatever it was. And I'm going to teach you guys all of those strategies in other videos and in the trading university as well. But what was the strategy that you were trading? And try to be as descriptive as possible. Don't only write what strategy it was, but write what you saw in that trade. What were some of the qualities that you liked about that trade? So if it was a breakout, maybe you liked the fact that there was really good, really strong multiple time frame analysis or alignment. Maybe it was a tight stop loss, really, really good reward to risk on that position. Maybe the trade had really, really good upside. Maybe you liked the way the moving averages looked. Whatever you liked about that trade, write it down and try to be as descriptive as possible when you're going back to analyze and refine your trading plan. It's going to make it a lot easier for you to decide what strategies are working for you versus the ones that are not, and what qualities of each trade should you look for. It's going to be a lot easier to kind of figure that out when you're descriptive. Next, you need the entry price, the stop loss price, the target price, and the exit price. You might have to go back on your trading platform to the trade logs and see exactly what price were you executed in terms of those orders. So the exact price where you entered, the exact price where you exited the trade, your exact stop loss price. You want to be as precise as possible. It's going to make the data that you collect a lot more valuable. It's going to make it a lot more, easier to read. And you also want to write the total profit or loss and the management for that trade. How did you manage the position when you were in it? Did you take 100% of profits at target one, or did you take half of the profits at target one? Whatever your management style is, whatever your strategy was, write that down as well. Try to be as descriptive as possible, because when you're taking 50, 100 trades, it's going to be difficult to remember, trade 5 that you took out of 100. So try to be as descriptive as possible. It's going to make it a lot easier to analyze and refine these strategies later down the road when you are looking back at your journaling and seeing what went wrong, what went right. So this is one way that you could track your trades. The other way that you could do is actually using a spreadsheet. So this is the one that I use. So I have the date here, I have the symbol, I have long or short, I have the entry price, stop loss price, and stop loss with my risk. And the great thing is that it actually calculates the share size for me. So what it does is it actually figures out my stop loss price, the size of my stop. So it just subtracts my entry price from my stop loss price. So that's the difference between my entry and stop loss price right here. And then I have risk. And if you divide risk, in this case it's G2, divided by F2, it will give me the share size that I need, the lot size that I need to make sure I only lose my predetermined risk with this entry price and this stop loss price, which is great. I also write the outcome price as well. And that will determine for me how many R's I made, what was my risk to reward. For that, I kind of have a complicated formula here. It looks complicated, it's really not. But if it says stopped, it will just reflect. If I write stopped here, it will just say stopped, right? Meaning the trade hit my stop loss and I exited with a $200 loss, which is my risk. Or if I write, let's say for this position, let's say my exit price was 400, it will tell me my exact reward to risk on that trade. So it will tell me that was a 1.6 R to R on that position. I made 1.6 on my risk. So 1.6 times 200, that's what my profit would be. And then, of course, you could write your strategy. Are you in or not, the profit, all your post analysis. So you could do it either through the spreadsheet method, or you could do it like this, just physically on the notebook, whatever you want to do. And just make sure you're tracking your trades. This is actually pretty easy. It's just tedious, and you just have to be disciplined enough to do it. But make sure you do it, because it's really going to pave the way of improvement for your trading. Most people struggle with improving, right? It's not about they struggle with trading. Everyone's going to struggle with trading at the beginning. They struggle with the improvement, right? They don't actually make any progress. And the only way to make progress is to look at the trades you're taking, figure out what's going wrong, and eliminate what's going wrong. You figure out what's going right, what's making you money, and you continue doing that. Trading a lot of the times is not about what you're doing, it's about what you're not doing. I always like to say it's easy to make money in trading, but it's a million times easier to lose money. And you can become profitable by literally just eliminating all of the bad things that you're doing that are causing you to lose money. The only way you could figure out what those bad things are and what the good things are is to journal your trades, practice pair, prepare, execute, analyze, refine. Do that over 5, 6, 7 times, right? After taking hundreds of different trades, and you're going to see improvement in your trading. There's zero way to not improve as long as you follow the system and you track your trades. Why doesn't anybody do this? It's because it's tedious. It's hard work. It takes hours of time to do this. But if you want to succeed in the markets, this is what you have to do. No one said it was going to be easy. No one said this is going to be a walk in the park. It takes time. It takes dedication. It takes a strong work ethic to actually do this every day. But make sure you do it if you actually want to see success in the markets. Hope you guys found this video helpful. And remember, just do pair. Prepare, execute, analyze, and refine, and always journal your trades. See you guys on the next video.